What is going on, family? What is up? What is up? What is up? What is going on, guys? Welcome to today's session with your boy Abel. Super excited to be here with every single one of y'all tonight, because it's another stream on another beautiful day that we're able to come out here, guys, and ultimately get better and grow together as a familia, grow together as a community, and ultimately really just get better with trading, really get better with investing, really get better with this phenomenal skill set and this opportunity that every single one of us have access to. And I'm extremely excited for it. You don't understand how extremely excited I am to be here with you guys tonight. Definitely something that I truly enjoy. Right, I actually love doing these streams for you guys, family, just because I know for the most part there's going to be a lot of breakthroughs, a lot of aha moments. There's going to be a lot of growth that happens on these calls, and that's something that I ultimately really just love experiencing, not just for myself but for everybody else on the call, family. So let's go ahead and see what we got in the building today. Go ahead and drop those locations, my family. I see we got Ghana in the house. Shout out to Z, first comment. Z, I see you. What's up? Appreciate you for being the first comment on the stream. Definitely appreciate you so much. Shout out to you for being the first commenter on the actual stream. What I'm actually going to be start doing soon, guys, as well, for anybody that is the first person to comment on one of these streams, you know, I am going to go ahead and start blessing you guys with something, right? Who knows what it's going to be? I don't know. It could be a one-on-one. It could be a Cash App giveaway. Who knows, right? But I will eventually start doing that, just to encourage you guys to show up on time, and to encourage you guys to also go ahead and just engage, right? Because engagement does play a very big part in this goal that I have here, guys, with being one of the biggest, one of the best YouTube or Forex YouTube channels here in this space. The only way that I can continue to grow this channel is by actually getting you guys to engage in the chat. And another way is for you guys to smash that like button. So if you guys have ever gotten value through any of my streams, definitely go ahead and smash that like button as well. Definitely appreciate it from the bottom of my heart. It means a lot to me, because like I said, my goal is to be the #1 Forex YouTube trading channel on here on YouTube. And I'm going to do that not by just creating fluff, not by any of that BS that a lot of people like to do, but I'm going to get to that point simply based off the value that I'm providing with you guys. Next level value, family. So definitely appreciate every single one of you guys that do engage in the community, engage in the chats. Absolutely love it. I appreciate every single one of you guys as well that are over there and, you know, liking the stream as well. Now, for those of you guys that are new to the stream for the first time, guys, one thing about me is I don't force you guys to like the stream. I don't force you guys to subscribe. You know, I actually want to earn that stuff. You know, so if you guys do get some value and you feel like I earned a like or I earned a subscription, then definitely go ahead and show love and do that. You know, it definitely means a lot to me as well. But let's see what we got in the building tonight, family. We got Ghana, we got Brooklyn in the house, we got St. Louis in the building, ATL on the check-in, Los Angeles, what is up, by way of Charleston, South Carolina, in the Carolinas. Shout out to every single body in the Carolinas, family. That's where I'm currently located, out here in beautiful North Carolina. So shout out to all my Carolinians in the chat. All right, let's see what else we got here in the building. We got the boy Skaggs on the check-in. What's going on, my brother Skaggs? I appreciate you, bro. What is up? We got the boot in the house. Let's see, Malaysia on the check-in. Shout out to you guys out there in Malaysia. It's 10 a.m. over there in Malaysia. It's crazy. You guys are already on Wednesday, which is absolutely amazing. We got Sydney, Australia, York, Pennsylvania. I see you, Marcia. How are you doing? We got Pittsburgh in the house. Money Mike, I appreciate you for tuning in, but I'm going to be honest with you. I'm a Baltimore Ravens fan, so you already know what time we're on. Right? Nah, but it's all love, Money Mike. I appreciate you for tuning in, man. Who knows? Maybe in the future we can go catch a Steelers-Ravens game and just experience the energy together. All right? Because like I said, one thing about me is that I'm not Hollywood, right? I actually want to experience a lot of different things with all my community members in the chat. So that would be a fire thing. Let's see what else we got here. I'm tapped in, but I'm also guarding control right now. Yeah, I'm going to jump on that war zone as soon as we're done with this for sure. Right, but let's see. We got South Florida in the building. We got Houston, Texas, Asheville, North Carolina. What's going on? We got Singapore in the building. We got the guy Winston in the house. What's going on, Winston? Good to see you. Baton Rouge, Louisiana in the building. We got Ghana in the house. Shout out to you guys out there overseas where It's pretty much literally in the middle of the night for you guys. It definitely means a lot for y'all to actually wake up and or at least be up and jump on these streams. But it more so says a lot about you and your dedication to really master this skill set. Because I remember my journey, guys, right? When I first started trading 7.5 years ago, like that was me, right? I was up till 2, 3 in the morning, 4 in the morning, literally just watching videos on YouTube, trying to get as much information as possible so that I could really get this skill set down packed. And ultimately, eventually did end up playing out in a good way. So shout out to every single one of y'all that is overseas, that right now you guys should be sleeping or could be sleeping, but you guys are up putting in the work, because you guys know that this is exactly what you got to do in order to get the big bucks, the big returns. Right, let's see who else we got here. We got Joe Moore in the building, Charlotte, North Carolina, checking in. What's up? What's up? We got Detroit in the house, California, Salson, what's up? How are you doing? We got Houston, Texas, the H in the building, Guyana, Toronto, shout out to the 6. I appreciate every single one of you guys. But let's go ahead and get right into it today, guys, because we're not going to be on here for too long tonight. I just want to get right into it, straight to the point, give you guys a lot of information, a lot of value, a lot of sauce. Take a look at the actual overall markets as a whole from more of a fundamental and a sentimental and a technical perspective. And then look at for opportunities, right? See if there's any opportunities that we could prepare ourselves going into London session and going into New York session in the morning. Because New York session is my main trading session. That's when I actually trade myself. Now, I actually had a really good question the other day from members in my inner circle. Shout out to everybody that's in my inner circle chat, in my inner circle community. If you want to be a part of my inner circle, which gives you access to a specific Telegram, a private Telegram chat where you're able to communicate back and forth with me, and we just have dope conversations. All you gotta do is literally just be a member of this YouTube channel. All right, there's 3 different subscriptions that you could choose from, ranging from $4.99 cheap, $5 a month, to $30 a month or something like that, right? So if you want to have access to that private chat, that private Telegram where you can get your questions answered by myself, then make sure you go ahead and subscribe to one of those actual memberships. If you do have a membership already, please let me know by sending me a message right here on Instagram. Instagram is right below my beautiful face, and send me a message. Just let me know that you are in, right? Send me proof though, right? Send me proof that you have a membership by taking a screenshot, and once you send me that, I'll send you the link to actually go ahead and join the community. And then from there, like I said, you're able to go ahead and just ask as many questions as possible, right? As you guys can see, I got my water ready with me tonight because I feel like tonight's going to be a really good one. Right, let's see who else we got in the building today. We got Suriname in the house. What's going on, Ronnie? Good to see you. Arizona in the building. My guy Bert in the house. What's going on, Bert? I appreciate you as always, my brother. Right, definitely means a lot for you to show up as well. And we got the boy Drew. I appreciate my brother Drew, my New Yorker out there. Shout out to you, bro. Appreciate you like crazy as well. Right, but let's go ahead and get into what we want to talk about today, family. So overall, taking a quick look at the economic calendar. We got a couple news events that are probably going to influence these markets, right? One that actually came out earlier today, which is the existing home sales release. You know, we actually came out lower, right? There are less houses or less home sales that occurred over the past month. They were actually expecting it to come out lower, but I do believe, guys, this is just my general opinion. Just a disclaimer, anything that I say on this streams, all right, anything that I say on this stream, family, is just based off my opinion on how I'm reading data, reading the markets, and analyzing it all as a whole. Okay, this is not going to be more. This is not direct financial advice. Whatever you do, whatever you decide to do with the information I give you is on your own recognizance. For me personally, this is just me, pretty much expressing my thoughts and my opinions on the markets overall. Okay, just a disclaimer. Got to throw that out there. All right, but overall, guys, like I said, for this right here, the existing home sales release, which measures the change in the annualized number of existing residential buildings that were sold, I truly believe that this is going to continue to drop over time, especially with us dealing with everything that we're dealing with. You know, interest rates going up, guys, is going to be a big reason why this also continues to decline, because now mortgage rates are, I believe, around 5-6%, which just last year was around 1 to 2%. So now it's literally going to be costing more to actually purchase a house now, right, than it was just last year. We're talking about now, you know, going from a $1,200 a month mortgage to now probably a $2,000 a month mortgage, right? Just using examples, you know. So the cost of actually buying a house now, because the cost of borrowing has now went up, that's probably going to really cause these numbers to absolutely continue to decrease. And this is important, guys, right? Because, you know, this right here, this is pretty much a gauge that really helps to pretty much predict the strength of the housing market, right? The housing market does play a big part in our economy as a whole, right? We really want to see a strong housing market as well. You know, so as this continues to go down and goes lower, and I believe we will see obviously more home sales continue to decrease now, because again, access to borrowing and lending is going to be harder to actually get. That's going to affect the overall state and the overall sentiment behind the markets as a whole. So this is something that was very interesting to see. Again, last month was 5.6 million. This month was 5.4. And I do, in my opinion, I do believe we will continue to see, you know, lower numbers overall, guys, for home sales. But that's what actually came out earlier today. For tomorrow, we do have some major news coming out tomorrow, guys, with the pound, or pretty much in a few hours, actually, in about 4 hours, 5 hours. You know, we do have CPI data coming out for the Great Britain pound. This is a big deal, guys, because obviously, for those of you guys that are not aware, CPI data measures inflation from a consumer standpoint. Inflation is something that we've been really dealing with, and what every central bank across the world, guys, right now has pretty much made their main focal point to try to really handle is inflation. And right now, they're expecting it to even go higher, right? So they're expecting an uptick in inflation over there, you know, in the UK, and this is going to affect, guys, the Great Britain pound as a whole. Now, just like how we talked about, right? Again, I talk about this on every single stream, and I try to do it so that it really, you know, it goes not into your conscious mind, but it really sticks into your subconscious mind, so that's always there, right? So now when you start to read CPI and you understand CPI, you understand as well how to really correlate that to the currency market as a whole, right? Because for fundamental analysis, guys, is extremely important, because that's going to directly affect these currencies that we're trading, right? Currencies and the price of currencies and the interest rates, or the rates that these currencies are being traded at, is a direct correlation, guys, to the strength or the weakness of an economy. So that's why, as a Forex trader, if you want to be a profitable, long-term profitable Forex trader, it is extremely important for you to be aware of these economical factors like CPI, especially something like CPI, all right? Because interest rates is going to cause either strong demand for the currency, or it's going to make the demand go lower for that currency based on, obviously, the interest rate that's correlated with it. So this is very, very important, guys. So we do have, again, CPI coming out tomorrow. They are expecting an uptick for the pound. Now, how could we approach this? It's there's two ways to look at this, right? The main way that I'm pretty much going to be approaching this, if CPI does come out higher, which is pretty much what's being expected to do, then obviously that's going to be not looked at as good for the economy, right? When we have high CPI readings, that causes a lot of fear and uncertainty and doubt in the markets, which is also going to cause the central banks to have to really be a lot more aggressive with their approach on how they're going to handle inflation. So if it comes out higher, my prediction, the pound is going to gain strength off of high inflationary numbers. Now, why does that make sense? I know it sounds crazy, right? A lot of people think, this is something that I used to struggle with as well, guys, right? So when I used to look at data on these calendars, and I used to look at it from more of a positive data versus a negative data and how it correlated to the currency, I used to get this completely wrong, right? Literally completely wrong. When I used to look at data right here, guys, that would say come out positive, I would think that typically that would be positive for the actual currency. And at times it could be, right? Depending on sentiment overall. And that's something we're going to talk about. But for the most part, we have to learn how to really differentiate the currency and the economy, right? The asset market as a whole, right? So it's either people are going to be more comfortable wanting to hold the currency and invest into the currency itself, because that's more of a safe haven type play, or they're going to actually be saying, yo, you know what? Let me actually be a little bit riskier, and let me go ahead and invest into the actual asset market, the equity markets, the stock market, and all these more riskier plays, right? So when we have positive data that comes out that is good for the economy, that is typically not good for the currency, because now people are going to want to actually liquidate that currency or take that currency and invest it into the equity markets as a whole. Okay, that's how we pretty much want to look at it from now on. That's what I started doing personally. It has really been paying out tremendously, guys, on how we really approach these markets from a fundamental and a sentimental perspective. All right, so if it's positive, data that comes out that's going to benefit the economy, yeah, we will see an increase in the stock market, the indice market, the equity market, the asset market, whatever you want to say. But we will possibly see a decline in the actual currency itself, because now money is flowing from the currency into these markets overall, guys. Again, really understanding the difference between risk on and risk off sentiment, risk on and risk off environment is absolutely crucial to every single one of you guys that are in the chat that are absolutely looking to get better with fundamental analysis, guys. And yeah, so that's pretty much how we want to play that, right? So again, high CPI numbers, if it comes out higher than expected, that's going to be looked at as bad for the economy, because inflation is still going up. Inflation typically is really not a good thing for the consumers, right? From an economy standpoint, you like to see growth, right? That's a good thing. You like to see growth, but you need to have healthy growth. You can't have growth, guys, where it's going too crazy, too rapid, which is what we're seeing right now with inflation, right? Where growth is literally, I mean, we're talking about the cost of goods over there in the UK or overseas, guys. The cost of goods over there is literally raising at 9% every single year, right? As of right now, the price of goods went up 9% year over year. That is crazy, right? That is a massive change, right? So I see we got my guy Louis, or my guy or girl, shout out to Louis V in the building, recent subscriber. I appreciate you. Shout out to you for subscribing and showing love to the familia. Hopefully you were able to get some value for tonight. And we got the brother Joe in the building. Shout out to the brother Joe, Sacktown. I appreciate you. Dropped a super chat of 20 cash. Thank you, brother Joe. I appreciate you. You know, since you supported the stream, if you have any pairs or anything that you want analyzed, or if you have any questions, comments, or concerns, you're going to be at the front of the line 100%, just because you did went and showed massive love. So I appreciate you for that. Okay, so like I was saying, though, guys, very, very important to understand these differences, right? So again, high CPI numbers, if inflation does come out high, that's going to be looked at as bad for the economy, because if we're having the price of goods increasing 9% year over year, technically, yeah, from an economy standpoint, you like to see growth, but that's unhealthy growth. That is the type of growth, family, that's going to cause a lot of people to really start to struggle, right? We're talking about middle class and lower class families are really going to get even worse and worse because of everything that's going up. We're talking about interest rates, or not interest, we're talking about the price of goods going up while wages are staying the same. That's not healthy, okay? So that's not going to be looked at as good for the economy, because now all the big boys, the smart money, they're going to anticipate the fact that interest rate is this crazy, and they're going to anticipate the fact that now the central bank is going to have to respond in a way that's going to affect the asset markets as a whole. So these are things that we have to really understand, guys, okay? So that's going to be very interesting. Now, if inflationary numbers come out lower, right, like if this actually comes out lower than 9%, see, now that might be taken in as something that's good for the economy. Okay, if it's good for the economy, you're probably going to see a boost in the stock market over there, in the indice markets, okay, for over there. But we're going to see a possible decline in the pound itself. So depending on what happens tomorrow, or yeah, I mean in a few hours, we could really see the pound either increase in value, the currency itself, or we could see it absolutely decrease in value as well. And we're going to take a look at pound dollar and pound yen, and I'll give you guys my thoughts on what really could potentially happen for sure. Right, but that's something that's very important, guys. We also do have CPI for the Canadian dollar as well. Again, a similar concept I just spoke about with the pound, right? CPI as a whole, guys, is something that every single central bank and every economy and every country is trying to deal with right now. So even tomorrow morning at 8:30, we do have CPI, core CPI data getting released for the Canadian dollar. Similar factor, high inflationary numbers that come out. It's not good for the economy, but it is good for the currency. Lower inflationary numbers, which is right now what is being predicted, could actually bring strength to the economy and weakness to the CAD as a whole. So that's going to be very interesting to see exactly what comes out with that one. I'll be actually trading at that time, because like I said, for me, guys, I do trade New York session as my main trading session. Again, I actually did get a question literally this past couple days. Abel, why don't you trade New York session live with us? And I'm going to be honest with you, family, right? That public pressure of trading live, that is a real thing, right? And New York session, that is my time to lock in. That is my time to focus, and that is my time to remain logical throughout everything, so that I can actually trade in the correct way that I'm able to trade without no public pressure. Okay, but I get it. A lot of you guys want to see, all this stuff occur in real time, and yeah, maybe in the future we'll get to that point. But I pay my bills with trading, right? Like, I can't be playing around, guys, dealing with emotional swings, because this is what's keeping the lights on, right? So, that's why I like these Asian sessions, because yeah, I still give you guys opportunity, I still give you guys ideas and setups, but it's much more relaxed, and again, I don't have that public pressure. So maybe in the future, though, I will do live sessions, right? Maybe in the future, but right now, nah, right? I need that period in time in the morning, New York sessions, for it to be me, my time. I go to Starbucks, I get my coffee, and I go ahead and I come back home and I lock in, right? I lock in and I focus and I trade and I do what I gotta do. And then after my trading session is done, then I go ahead and update everybody on what was really good. But that's just to really pretty much just update you guys on a few questions that I've been getting overall, and just me being 100% honest, real, and transparent with you guys about that whole process. That public pressure is a real thing, right? And that public pressure can cause you go from thinking logical to go and thinking more emotional, and that's what we not doing. Okay, we need to make sure that everything that we do trading wise is logical based, not emotional based, and that is absolutely important, guys. All right, but overall, besides those CPI data, guys, we do have Jerome Powell that's also going to be testifying tomorrow morning. Obviously, whenever Jerome Powell testifies, guys, Jerome Powell is the chairman of the Federal Reserve over here in the U.S. Anytime that he testifies, you always just gotta, you gotta be careful, right? Because depending on what he says, sentiment gets created, and the markets will react to based on what he's actually saying. So we have to be aware of that, guys. So that's the major news is for tomorrow that we have to be aware of. Now, we do have some other ones going out throughout the rest of the week, but we'll talk about those tomorrow on tomorrow's session. So we're just pretty much take it day by day. But overall, my bias has not changed. My sentiment has not changed overall, guys, in these markets. And I'm still pretty much expecting the same exact things that I've been expecting. Weaker indice market, weaker stock market, bullish the US dollar, and all these good things, right? So let's actually go ahead and take a look now, guys, at the dollar and see what we've pretty much been doing over the past week or so, right? So overall, guys, right, I mean, we can clearly see that the dollar has absolutely been in control, right? Absolutely on fire. This thing has just, I mean, literally non-stops, right? Every time we see a pullback or a decrease in the market, this thing says, nope, we're not ready to slow down just yet. And even right now, we're experiencing a minor pullback in the market right now, but overall, again, I would not be surprised if that's short-lived and we continue to see higher prices, guys, for the dollar as a whole. So I'm still very much bullish the dollar as well. Even going into this week, I'm still very much bullish. I still very much expect a lot more bullishness to continue. And that's pretty much what I'm going to be predicting or utilizing, guys, in terms of correlation for when I actually do look at currency pairs to trade. I'm going to be approaching this, guys, with the sentiment being risk off, which is going to benefit the dollar itself, right? And it's going to devalue the asset market, the indice market. So my sentiment is still risk off. Okay, what did I tell you guys last week, family, right? As long as the sentiment does not change, what did I say? As long as the sentiment does not change, what did I tell you guys? Go ahead and finish this sentence, family. Finish this sentence. Right, as long as the sentiment does not change, what do we do? Finish this sentence. I know a lot of you guys should know this, especially all you guys that have been on the streams already. Right, especially all you guys that have been on the stream already. Let me know in the chat, guys. What does it mean? Let me know. Let's see. Can't wait for that news to stop me out on pound. You funny. All right, let's see. Kyle Hustles in the building. Shout out to my little bro, Kyle. I appreciate you, dog. Let's see. Man needs to make that caramel fried pay money 100%. I need one of those every single morning, right? Free Starbucks for a week since the Celtics lost. Yeah, right. I had a bet with the boy Kyle on the Warriors and Celtics game, and I kind of hustled the little bro. I'm not even gonna lie. He fell for the hustle. I'm from New York, guys. Right? I was born and raised in New York, and we all about the hustle. And he definitely got hustled, right? So he's paying for my Starbucks for the week. Shout out to you, my brother. Appreciate you. Let's see. Can you go over GJ? Yep, we're definitely gonna go over pound yen for sure. That's definitely one of my go-tos. I got you. Let's see. So the answer that I just asked, guys, right? As long as the sentiment does not change, you stick or stay with the trend. Exactly. All right, exactly. Shout out to you, LT. Shout out to you, Kyle Ecker. Shout out to Mr. Golden Arms, Marquino Allen. I see you, Saker. Yes, exactly. Right, brother Joe coming through. The trend does not change. Exactly. Right, Carol. I appreciate you. Let's go. Let's go. Let's go. Exactly, guys. Right, as long as the sentiment does not change, there's no reason for us to go against the overall trend unless you're just trying to catch a short-term counter trend opportunity. That is possible. But if you are a newer trader, okay, if you are still trying to become profitable in this game, then trust me when I say this. It's best for you to just stick with the trend. Okay, you're going to have a higher probability of being correct if you're staying with the current flow of this market. Okay, so yes, as long as the sentiment does not change, we stay with the trend. Unless you're experienced and you just want to catch some counter trend moves, then that's fine. If you're not experienced, if you're not profitable, if you're not seeing consistent results, then stay with the path of least resistance. Okay, stay with the path of least resistance, and that's going with the current trend in the market, family, right? So that's pretty much where we're at with this, guy. So overall, I'm still very much bullish. Right, we got 2 new subscribers in the building, family. Shout out to you guys that actually just subscribed. We got 3 new subscribers. I just missed the first one. I see we got Tremaine, we got Joshua. Right, shout out to every single one of you guys that just subscribed. I appreciate y'all. I completely missed the first person that subscribed, but I appreciate you for being subscribed, family. Go ahead and drop some welcomes in the chat. Go ahead and drop some welcomes in the chat to our newest subscribers. You guys know we show love here. Right, this is a channel all about education, positivity, growth, and just showing love at the end of the day, right? So shout out to you guys. I appreciate y'all. Welcome to the familia. All right, welcome to the familia. So overall, like I said, I'm still expecting long-term bullishness, right? Now, that's not saying, guys, that the dollar could just start flying. I mean, it is possible, right? And we're going to actually go to lower time frames eventually and really take a look at that. But overall, the overall bias, the overall macro perspective is still bullish. Okay, so what I mean by that, guys, is that yeah, price can absolutely start flying from these levels, right? I mean, we did see price pretty much just give us a decent reaction from a previous level of structure. Let me actually highlight this for y'all. Right, we actually did see a little reaction, guys, from this previous level of structure where price has clearly acted as resistance, support, broke through it, acted as support once again. So yeah, you know, there is a possibility for price to continue. But even if price doesn't continue from there, right, because say we're in a more of a complex pullback type of situation, even if we do go a little bit lower, I'm still going to be expecting more bullishness to come in. Okay, I'm not changing my bias overall, guys, until the sentiment overall starts to change first, right? Because sentiment is pretty much what we'll be able to really start to predict first anyways. All right, so look at, if we see this pullback right here, then we'll go ahead and see market go ahead and go to the upside, right? Let's see, we got the boy Skaggs. Welcome to the Wealthy fam. I appreciate you, my brother, for actually being a sponsor of the channel. Let's go. I appreciate you, my bro. You know, we've been through it. You know, we've been doing this together for a while now. It definitely means a lot, so I appreciate you. Let's see, I just wanted the emojis. You are hilarious, right? But overall, this is what I'm expecting, guys, right? As you can see, the overall outcome is still bullish, right? I'm looking at various key levels, and I want to see more upside overall, okay? More upside overall for the dollar as a whole, guys. So that's pretty much what I'm looking for. Now, what could we expect going into tonight? Right? Is there anything that we can actually look for going into tonight in terms of the dollar, right, that can help us predict these other currencies? Well, very simple, right? This 104.5 level is going to be very interesting to me, right? Like very, very interesting. If we actually see price go ahead and break above this 104.5, then I'm going to be expecting, guys, a lot more upside from that point on, right? And again, I could be wrong, you know, but that's my general opinion. If we actually go ahead and break above this key level right here of 104.5, then I'm expecting more upside for sure, right? More upside to continue going higher, right? We got Mr. Golden Arms. What's going on? Shout out to you. I appreciate you for sponsoring the channel as well. Newest sponsor. It means a lot to me, right? Again, anybody that is a sponsor of the channel by actually being a member, right, by choosing one of the memberships, you do get access to my private chat. So please make sure to send me a message right on Instagram. My Instagram is, again, right below my beautiful face. Send me a message, showing me that you actually did become a member of the channel, and then I'll go ahead and get you added into that private chat that we have created for everybody. You know, it's pretty dope. I think we got around 60-70 people already in there. There's still a lot of people that still haven't even really joined that did become sponsors of the channel, so please make sure to reach out to me if you did actually become a member already. Right, but yeah, this is what I'm looking at, guys. Right, if we're able to go ahead and clear this 104.5 and go higher, I'm expecting a lot more bullishness to come in. Now, how are we going to utilize that, guys, when we're trading currency pairs? Right, again, very simple correlations, guys. Right, trading really needs to be simplified. Okay, if we have a bias, the bias right here, right, is bullish dollar. Okay, and this is just for the bullish dollar example. Then what we could do, guys, is very simple. Right, anything that ends in USD, right, when we have pairs that, you know, the dollar is the quote currency in the pair, very simple, these assets should go down because the dollar is dominating in strength, which will cause these currencies that end in USD, right, the currencies that end in the currency pairs that end in USD, they should go down. Right, and then the currency pairs that begin in USD, these should go up in value. Right, this is very simple correlation 101. Right, very simple correlations that, again, as a forex trader, you should really understand. Okay, so my bias is a bullish dollar. So when we're looking at these assets like Euro USD, I should be expecting this to go down. Obviously, there are different factors, guys, that can cause this to change, right? Like if something happens over there with the euro, like if the euro did something very drastic, like raising rates higher than the dollar, then that might change the bias as a whole, right? Because then the euro might gain strength. Or if there's any other type of data that could possibly really impact the currency, then yeah, the correlation isn't going to work, right? But for a general standpoint of general perspective, always, and this is just specifically talking about the euro, since the dollar itself, right, especially the dollar index, it is measured against a bucket of other currencies. Majority of that bucket is made up of the euro, right? So if the dollar is bullish, then the euro is going to be bearish all the time. If the dollar is bearish, then the euro is going to be bullish every single time. They have a very, very strong correlation to each other, right? Negative correlation to each other. So overall, yeah, I'm expecting more downside for the euro. Okay, now the question is, where are we actually going to go ahead and see price possibly turn around at? Well, I'm going to be highlighting, guys, 3 specific levels right here on the charts so you guys can see the key levels that I'm going to be focused on going into tonight, going into tomorrow morning. And as you guys can see, again, keep trading simple, right? Yes, it's important to understand a lot more, you know, you could say advanced terminology and advanced techniques, right? Especially like when I utilize things like the quote-unquote smart money concept trading perspective, right, where we're talking about imbalances and order blocks and liquidity pools and all them things, right? Mitigation levels and discounted versus premium pricing points. All that stuff is important, right? But you really want to keep things extremely simple, even when you do understand those concepts. Okay, I understand those concepts. I've taught on those concepts, right? I've made a shit ton of money on those concepts. But for me, I make more money when I keep things more simplified than I do trying to become more advanced and trying to really play all these different things, right? It really clouds my judgment more than anything. So very simple. If we go ahead and see a break of this 105 level, right? Mainly if we see a close below, I'm going to say the 104.7 level, right, we're probably going to see a lot more downside, right? And I would not be surprised if we seen price actually come and clear, you know, these lows that we have down here that were pretty much created, right? In fact, I actually want to target those lows. Like, I want to see price go ahead and run those lows. Okay, so I'm definitely targeting those lows. So if we break the 104.7 level for the euro, I'm expecting a pullback, and then I'm expecting a continuation. Now, if we don't immediately break that level and we pull back up, then guess what? This 1.064 level is going to be extremely attractive to me, right? Because now we have an obvious level, or not just an obvious, but a key level of structure where price has acted as resistance, turned into support. We broke back through it, and then price again can act as resistance once again. And we also have confluence, right, with the EMA, the 50-period EMA right here, right, that I love to utilize all the time, right? As you guys can see, I don't really use too many indicators, right? I like to rely on my understanding of fundamental and sentimental data first, but then I also like to rely on raw market structure and price action. Indicators, especially anything that I do use, those are like third and fourth and fifth type confirmation type of things, right? I do not rely on indicators whatsoever, because at the end of the day, all of these most of these indicators, I'm not gonna say all, but most of these indicators that are used, they're all lagging in nature. Okay, they're lagging in nature. So by the time you usually get a confirmation or something, the move already happened, right? So that's why it's not really good to depend on indicators. But the reason why I like the 50 period moving average is because it's an indicator that really just helps you predict a few things, right? The main thing that I like to utilize this indicator for is to help me identify the trend, which again, I already do first things first, do market structure and price action, identify the trend, but it's always good to have that extra confirmation, right? So I identify the trend with the moving average. I identify support and resistance level, key levels with those moving averages, okay? Because this moving average, guys, it acts like a dynamic support and resistance, or a dynamic quote-unquote trend line, you could say. But then I also utilize it for entries as well, right? So if I see price come back up to this 106.4 level, right, come and retest this trend line, and we start to see price action reject from the trend line, that could be confirmation for you to go ahead and jump in. Okay, does this make sense, guys? Let me know in the chat. Drop some sevens in the chat. This makes sense, right? Again, we're keeping things simple today, even though we always keep things simple, right? My nickname in the academy I used to teach for, they used to call me Mr. Simplicity for a reason, right? Because I'm all about taking advanced things and keeping things simple. All right, so drop some sevens in the chat real quick. Let me know if you guys get this. Okay, I see. Okay, we got a few of you guys that get it. We got a few of you guys that's getting it. That's what I like to see. Again, I will definitely love a lot more, participation if you can, right? I get it. Some of you guys are probably just watching the full video, and in order for you to get the chat, you have to pause the video and all that. I get it. You don't have to do that if you don't want to, but for all you guys that have the chat open, I definitely appreciate the participation for sure. Right, so overall, guys, this is really going to be my bias, my outlook that I'm going to be looking for going into tomorrow morning with the euro. Right, is either we're going to see this break of structure right here, and then we'll get an entry on the break and close and retest, right, and then we'll take advantage of that way, or we can see price pull back up and come back up to around the 1.064, and then from there we can go ahead and take advantage of it. Now, in terms of where our stop losses on all of our trade management perspectives, right, how could we actually do this? Well, if we do get an entry for Euro USD, say on the break below, right, this 104 105 level, 1.04, let's see, what was it, 1.045, right? If we actually do get a break below and close below this level, and then we look for the retest for an entry, right? Very simple. My entry is going to be probably right back up here. All right, literally, let me go ahead and zoom in real quick. And again, this is all done on a daily time frame, by the way, right? At least for right now, we're looking at it from a bigger time frame, bigger perspective, okay? But if we do get that break and retest, guys, type of opportunity, all right, where we see something like this, very simple. My stop loss, again, is probably going to go above a swing high. Now, again, this is more of a daily perspective. So let me actually go ahead and go to lower time frame real quick, right? Because I want to really give you guys real time, like real actual analysis that we could potentially really take advantage of. So looking at this market right here, guys, I mean, what's the last thing we ultimately seen? We did see the market ultimately give us this pretty much a very strong spike up to the upside that really cleared these highs right here. But then ultimately price really came back down and rebounded and came back lower. This just looks very bearish to me, right? Like seeing things like this, guys, where we have this move, right? Very aggressive move, right? 3 candles, 3 hours, right? Very aggressive move that went for what, almost 60, 70, 80 pips. Got completely erased, right? Literally got completely erased. So that's, in my opinion, very, very bearish in nature. Right, so what I would like to look for now is how can we actually get involved with Euro USD, right? Well, if we're stable, and this is again, if this is something that's, I'm not going to say it's risky, right? But this is taking a trade before that 1.045 level actually gets broken, and it's possible to do that, right? Obviously, a close below, if we're able to get below that 1.40, that 1.045 level, then that's going to bring a lot more confidence that we're going to see more downside. But it's definitely an opportunity for us to even get involved at these levels here, right? So the question is now, and this is something that we have to really ask ourselves, right? Is price actually going to really start dropping from this current level that we're trading at right now? Because it is possible. Okay, listen, the market gonna do what it wants to do, right? It is possible for price to absolutely just go ahead and really just go bearish from this level because of how we reacted off of this impulsive down, right? We pretty much really erased that entire move. So it is possible for price to go down there. Now the question is, if we were to take a trade from right here, where could our stops go? Right? Where could our stops go where it makes sense logically, right? And it's also giving us a valid risk reward, right? Because if I were to take a trade, guys, based off of this short-term little impulsive move right here, right? This little 3 candlestick pattern that we're seeing right now, this drop right here, right? My stops, technically speaking, will have to be above the swing high, right? So we're talking about the swing highs right here, right? Technically right now, this will be classified as a swing low. We don't know if this is going to be the ultimate low before we see a little minor pullback. We really don't know. But this is the swing high, right? So if I'm taking my trade, my stop loss technically should be above this swing high right here, okay? Right above this one right here, okay? So that's how I would be approaching this. Now, again, the question is, though, does it make sense in terms of risk to reward, okay? Because one thing about me, guys, that I stress more than anything is the importance of risk to reward, right? Risk to reward is absolutely, absolutely crucial, right? Let me actually show you guys something real quick, all right? And this is also going to be a part of my boot camp, right? Shout out to all you guys in the boot camp, right? I appreciate y'all, man. I'm excited about the boot camp, guys. Like, I know I keep talking about it, man, but I don't think you guys understand like the type of value that's really about to be yo, like I said in the Telegram, right, in the actual channel itself, right, my public one, right? Like, I'm not just creating profitable traders with this boot camp, right? Like, I'm creating mentors, I'm creating teachers, right? I'm creating the next round of trading influencers, right, that really grow, you know, a brand based off the value that they're providing, right? And that's because of the value that I'm about to bring to you guys in this boot camp. It's next level. Like, I'm tempted to show you guys a preview of like just the PowerPoints that I created, but I'm gonna keep that for everybody. I'm not even gonna do that to y'all, right? I'm not gonna do that to y'all, right? But just know, right, like I said, with this boot camp, which we go in depth on all of these concepts, it is going to be next level, right? Like, it is going to be next level. Like I said, I'm not just creating profitable traders now. I'm creating the next round of mentors, right? The next round of coaches, right? The next round of we could say, you know, content creators as well, because I'm pretty sure some of you guys that actually do get this down packed, you know, you're probably going to also create your own course, your own content, your own YouTube channel, and pretty much just provide value to the masses as well, right? So that's pretty much, you know, why I'm so excited about this boot camp, guys. Again, this is the last week we do go live. The boot camp goes live next week, right? Literally Monday through Friday, we're going live. We're about to go in, provide so much value. Is about to be next level, right? I appreciate every single one of y'all that absolutely subscribed, that joined the actual boot camp. It's going to be lit, and everybody that did join the boot camp, you guys is lucky, right? Because for the price y'all paid for it, I mean, like, man, just know you guys are lucky, right? I should have charged easily $1,000 to join the boot camp, but since it's my first one, right, you know, we kept the price pretty low. But the next boot camp that I host, which will probably be August, September, maybe, who knows? Yeah, the price is definitely gonna double. It's gonna double, guaranteed, right? But again, let's go back to risk to reward. Enough of the boot camp, right? So look at this, guys, right? Risk to reward, in my opinion, is far more important than your actual win rate, right? One thing that most traders end up doing is, most traders, guys, they get so caught up. Let me make this full screen, right? Most traders, they get so caught up on trying to be 100% accurate, right? They get so caught up on trying to win every single trade, and the reality is that's not likely, right? You're not gonna win 100% of your trades. It's just not gonna happen, like, at all, right? You're not gonna win 100% of your trades. It's impossible to win 100% of your trades, guys. It's actually very, very hard to be a 90% accurate trader. It's actually very, very hard to be an 80% accurate trader. Now, I'm talking about not during short periods of time, right? Because that's possible. Yeah, you can have winning streaks where everything is winning, right? But over a long period of time, right? Over a 6 month, a year, 2 years, 3 years, 4 year period, it's extremely, extremely hard to even be an 80% accurate trader, right? Extremely hard. So instead of focusing on trying to be those high accuracy type traders, what you can focus on is utilizing proper risk to reward for every single trade that you take. Because when you utilize proper risk to reward, see, win rate really doesn't matter as much. Because if you're using proper risk to reward, especially higher type of risk to rewards, like 1 of 3s, 1 of 4s, 1 of 5s, 1 of 6s, 1 of 7s, 1 of 10s, right? I'm actually in a trade right now where it was a 1 of 13 risk to reward, right? So when you think about those type of trades, and if they actually play out, all the losses that you might have taken in the past are going to be pretty much wiped out, and you also might even end up in profit, right? So let's actually look at this risk to reward and win rate little sheet right here that we have, right? So if you're doing 1-to-1 risk to reward, which means that you're risking 20 pips to go for, you're risking 20 pips to go for 20 pips. You're risking 1% to go for 1%, right? You have to be 60% accurate in order for you to be profitable, okay? Which again, a lot of people are like 60%, man. Yeah, I could do that. Do not sleep, all right? 60% accuracy is actually probably harder than you might think, right? Like I'm being again, I'm the trader, guys, that's gonna keep it 1,000% real with y'all, right? Shout out to Tatum Miles in the building. What's going on, Tatum? I appreciate you for subscribing. Welcome to the family, right? But again, guys, 60% accurate is actually very hard to do, right? Don't act like that's a walk in the park, because it really is not, right? Especially over a long period of time. Again, let's be realistic here, right? But at a 1-to-1 risk to reward, you have to win literally 6 out of 10 trades consistently over a long period of time, which again is possible, but do not act like it's a walk in the park. What I recommend, and this is what I personally do, right? I do not take a trade unless it is a 2-to-1 risk to reward, okay? So if I'm risking 20 pips, my target needs to be 40 pips. If I'm risking 40 pips, my target needs to be 80 pips, right? Whatever my risk is, my target needs to be double that. Because when I take trades that are at least a 2-to-1 risk to reward, see, now I can actually be profitable while only winning 4 out of 10 trades. See, now that's a lot more doable, right? This is something that every single one of us can absolutely do. We can win 4 out of 10 trades pretty consistently over a long period of time with no issue whatsoever, especially when you get all the other aspects of trade down packed. Right now, how many of you guys in the chat really think that winning 4 out of 10 trades is actually possible? Let me know in the chats, right? Shout out to you, King Lions. I appreciate you for welcoming the newest family member. All right, again, I show mad love to everybody that does show love to everybody that's newer to the family, because like I said, we show love here. All right, so I definitely appreciate you, King Lions. Thank you so much for that. Right, but guys, 4 out of 10 trades, right? That's actually very doable, right? Let me know in the chats, yes or no. Is that doable, yes or no? Let me know in the chats, right? Because I'm confused right now. Yes, sir. That's super possible. Yes, it's possible. Yes, it's possible, right? Shout out to you, BTC Mommy. I see you. Let's see. Yeah, and a good week for me, right? Yeah, I'm telling you, yo, Skags, they don't understand, bro. Like, how hard it is to actually be 70, 80%, 90% accurate over a long period of time. Like, they don't understand that, Skags. All right? They don't understand it, bro. Again, and that's a big reason why a lot of traders struggle, is because they're coming in creating these. I'm not going to say it's unrealistic to do that, because there are traders out there that are extremely accurate and that are hitting at a 70 to 80% clip. But most traders, 95%, 99% of us, we're not going to be able to do that, right? But 4 out of 10? 4 out of 10 is doable. 5 out of 10? 5 out of 10 is doable. And the reason why this is important, guys, is because, again, we have to really start looking at the markets and trade from a perspective that's going to allow us to really keep the emotions out of it, okay? We are all human beings, right? So we're always going to be emotional no matter what. But your ability to manage your emotions is going to be much higher and much likelier if you're actually keeping things more perspective based, right? So instead of coming in at the beginning of the week, right, and saying, man, let me go ahead and win every single trade this week, right? Actually say, you know what? Let me go ahead, utilize 2-to-1 risk to reward, and let me at least try to win 50% of my trades this week. That's more likely. Right? Because when you come into the week, guys, with the mindset of, man, let me go ahead and make 100%. Let me win I want to win every single trade this week. When you come in with that mindset and then you take that first initial loss, that's when the struggle really becomes, or that's when the struggle really comes in. That's when people really start to mess up. is because now they messed up their expectations. Because they wanted to win every single trade. But once you take that first loss, it's going to mess you up so bad that now you're going to be making other trades, and other decisions are going to be more emotional based than it is logical based. Sheesh. I'm telling you. I'm telling you. You know what's crazy, right? This boy Skaggs, right? Shout out to Skaggs. Definitely tagging Skaggs in this. Right? He actually dropped a quote in our chat that we have, right, with me and our business partners. Let me actually go get that quote, right? And he actually said to tag him too if we use it, right? So I'm shouting him out right now. But this quote is crazy, right? He said, "It is very possible for a trader to win 90% of their trade." Listen to this, right? It's very possible for a trader to win 90% of their trades, but still lose 90% of their account. Sheesh. Now think about that. That just comes from a lack of money management. Right? That's crazy though. Right? Again, that's nuts. Right? Imagine that, winning 90% of your trades but still end up blowing 90% of your account because you suck at money management. You lack in money management. All right, and just speaking on that topic as well, guys, and this one might hit home for a lot of people, right? Because again, I like to touch a lot of key points that I struggled with, that I dealt with, because it really just put things in perspective for me, right? But listen to this, right? In terms of money management, right? We're talking about money management, guys. We're not really understanding money management from a trading perspective is absolutely important, right? Which is why I literally have an entire PowerPoint, right? Literally just talking about money management techniques and all these good stuff, right? Like literally an entire PowerPoint. All right, like I kid you not, an entire PowerPoint. All right, I'm not going to show you guys the actual whole thing, right? Because like I said, I'm going to keep this for everybody that's in the boot camp. But like I have an entire PowerPoint, guys. Literally an entire day in the boot camp is all about risk management, money management, and trade management. Right, an entire day. Right, look at this. Right, this is the only slide you guys are getting from the boot camp. Right, day 2, risk management, money management, trade management. Right, it's not about being right or wrong. Rather, it's about how much money you make when you are right and how much you don't lose when you're wrong. Right, so money management is extremely important, guys. But this is something that we all have to understand as well, right? When it comes to money management, right? And this really correlates to how you are as a person overall, right? Because one thing that I really learned about trading is that trading really shows you more of who you are as a person than you would even think. Right? Let me talk about that right now, right? We gotta talk about this. Trading is going to expose who you are as an actual individual. Trading is going to expose you. You going through this process and trying to learn this skill set is going to expose you. Right? So if you lack money management skills in real life, like if you're negative in your bank account all the time, if you're constantly overdrafting, if you go through that process all the time, then that's literally going to expose you, because it's literally going to have the same exact thing with your trading accounts. I'm talking to you, right? You right there, right? That can relate to this, because that was my struggle, right? I used to blow account after account after account, even after I felt like I knew technical analysis, right? Again, guys, because like I said, for 2 years, my first 2.5 years, I sucked. Like I was terrible, right? I made no money at all. I made no withdrawals, like no real withdrawals my first 2.5 years, like none. I have no problem telling you guys this, right? Because I want to make sure that you guys understand that this is all relatable stuff that you guys are probably experiencing. Right? I made no money whatsoever my first 2.5 years. Right? And it wasn't because I didn't know how to do technical analysis, right? Technical analysis is extremely, extremely easy. Right? Understanding structure, understanding key levels, understanding all that stuff, that's easy. Right? So it wasn't, the blown accounts that I got in my first 2.5 years wasn't because I didn't understand how to do technical analysis. The reason why I blew so many accounts in the beginning of my journey was because I had a lack of money management skills. That's the biggest factor. I had a lack of risk management and a lack of money management skills. That's why I was blowing account after account after account. And also in that period in time in my life, I was also broke, busted, and disgusted, where I constantly had no money in the bank account. Most of the times it was negative bank account, And that's also correlated and translated into how I traded my trading account. So how you treat your bank account today is going to be how you treat your trading account tomorrow. Oh my God, that's a bar. That's a bar. That's a bar right there. Family, that is a bar. Right? I want you guys right now. If you guys are getting some value, right? Let me see if you guys are getting value tonight, right? For every single one of you guys that are getting value tonight, I want you guys to go ahead and I'm gonna choose somebody, right? I'm gonna do a $50 giveaway tonight. Well, I'm gonna do it tomorrow actually, right? $50 giveaway. Right? To anybody that actually tags me on Instagram. Right? On your story. Go to your story right now. Right? Actually record something, a nugget, a gem that I said tonight, and actually put it on your story. Right? And I'm going to pick tomorrow at noon, 12 o'clock, right? 12 p.m. Eastern. Right? I'm going to pick somebody, one of you guys with the best quote. Right? And I'm going to send you guys some money. Right? Whether it be through Cash App, Bitcoin, whatever it is, we got you, right? Because this is some gems. This is the information, family, that people do not teach you because them themselves are still struggling with it. And you know how the saying goes, if the shoe fits, the shoe fits, right? And most traders that still struggle with this and just are putting on a persona, they don't want to talk about this stuff because the shoe fits them right now. Right? That's what it is. Right? But let me say that one more time for the people in the back, right? I'm looking at you dead in your eye right now. The way that you are managing your bank account right now is the same exact way that you're going to manage your trading account. So if you struggle with saving money, if you struggle with keeping money in your bank account, then you're also going to struggle with keeping money in your trading account. My gosh. I'm telling you, family, this is that real value. I'm already almost done through my water. I'm about to get another bottle. Man. Let's see. Stop loss should be less than take profit. 100%. So true. Facts, it gets gritty on this journey for real. It does. Know when to stop and get out. 100%, no. 100%. Whole different level of psychology. Definitely humbling. 100%, TJ. This is what people need to need. This is what people need to hear, though. Right? This is what people need to hear, right? This is what you got. This is what you gotta hear. This is important. The same way people max their credit cards, they will max their trading leverage. Oh my God. Oh my God. That's a bar. Oh my God. That's a bar. Yo. No, that's a gem right there, right? The same way people max out their credit cards, the same way that they're gonna max out their leverage in their trading account. That's a bar. Guys, somebody write that down, man. Somebody write that down. That's a bar. That is a bar. And again, there's going to be people on this call that are going to take that the wrong way, right? All this that I'm saying right now, there's people on this call that are going to take it the wrong way and be like, oh, man, no, he's just making fun of people, da-da-da. But then there's also going to be people on this call that take it and realize that, damn, maybe that is my issue. Like, damn, maybe that is where I'm struggling with. And you're going to have the awareness to know that you're struggling with that. And then you're also going to have the discipline to change it. And that's why you're going to be a successful trader. All right, so let's get back into it. Right, so again, EURUSD, guys, like I said, if I were to take an entry from this level right here, my stops will have to be above these highs. Right, no ifs, ands, or buts about it. Okay, my stops will have to be either above those highs or even above this high just to be safe, right? Either or. But if you were to do it, make sure that your risk reward makes sense, right? Again, for me, I want to target all the way back below these lows, right? Like, I'm zooming all the way back out, right? I want to target all the way back to these ultimate lows down here at around 1.0345 levels. All right, so if we get an entry, then I'm targeting much lower, right? And again, this is just my general opinion, my bias, right? I could be wrong. Market could fly from here and smack me on, give me a stop loss. It is what it is. The reason why I don't care and stress about losses no more is because I'm managing my risk correctly. I'm only losing a fraction of my account every time I get stopped out. All right, so that doesn't affect me whatsoever at all. Like, at all. That's what you want to do, right? You want to trade, guys, with an amount that's not going to affect you mentally, right, if you lose. Right, shout out to the boy Bert. I appreciate you, Bert, man. Always showing love, man. Dropping the big 20 bomb. Let's go, let's go. What are we doing, Bert? You the man. Appreciate you, my brother. You the GOAT for real. Right? Big Bert, appreciate you, bro. If you know the vibes. If you want analyzed, if you want anything analyzed, if you want any pairs you want looked at, let me know. We'll definitely go ahead and take a look at those for sure. Appreciate you, man. So this is what I'm looking at, guys. Either we're going to sell off from this level, or there is a possibility for price to come back up to these levels and also sell off as well. Right? Either way, whatever you take these levels at, you know what I'm saying, just manage your risk correctly. And yeah, let's see. Just deal with the consequence at the end of the day. Right? Again, that's the biggest thing about trading. You have to learn how to take the trade. Right? As long as you followed your rules to the T, you didn't do anything against your rules, then you just deal with the consequences, right? Whether they're positive or whether they're negative, right? But overall, that's what I want to see for the euro. If I'm wrong, then I am wrong, and I will accept that. Okay, like if price was to come higher than these levels, if price was to come above this 104 or 1.055 level, then at that point, I'm going to be expecting price to probably continue going higher, right? So overall, I'm just going to read the markets and react to what the market ultimately tells me. Let's go ahead and see what else we got here, guys. Taking a look at the pound dollar. Again, this one's going to be very interesting, guys, depending on what the data comes out with tomorrow. Ultimately, I'm still very much bearish the pound dollar as a whole, right? Like from a bigger perspective, I'm very much still bearish. It just, again, depending on how this data comes out tomorrow, it could really, you know, change the sentiment short term, right? Short term change in sentiment is very, very possible. And these are things that we just have to really be aware of, right? So overall, we can see price possibly break this level right here. You know, what is this? This is the 1.21 level, a retest, and then a possible continuation lower. That's very possible. Or price can also push back up and then go ahead and possibly go lower from this level right here around 1.248, 1.25 period. Yeah, so that's what I would like, right? 1.25 is probably really what I would like to see. But overall, you know, I'm literally just going to be playing what the market gives me, right? Literally just playing what the market gives me, right? If the market gives me an opportunity to go ahead and catch a break and retest type of play, then that's what I'm riding, right? If it actually ends up pulling back higher up to this 1.25 level, then I'll utilize that area as well to go ahead and potentially target, you know, more downside as well. Now, again, if the data actually comes out where inflationary numbers come out lower than expected, okay? If inflationary numbers come out lower, right? Again, keep in mind, guys, right? They're talking about inflation going from 9% to 9.1%, right? So it's literally a 0.1% increase. But if it comes lower than 9%, then that can bring in some short-term strength for the pound as a whole. And if that happens, then I'm going to be expecting possibly the market really just come up and fill all of this clean traffic right here, right? All of this clean traffic that we have right here. If inflationary numbers come out lower, I'm expecting all of this clean traffic, all of these fair value gaps, all of this imbalance, whatever terminology you want to use, I'm expecting all of this to possibly correct it. And then eventually, I will still be expecting probably more decline over here for the pound dollar, right? Again, it's just going to be short-term change in sentiment depending on how the data actually comes out tomorrow, right? So overall, these are the outlooks. Again, I would not be scared to take a sell on a break below this level right here of 1.21, 1.22. I would not be scared whatsoever, you know what I'm saying, because then I'll just be managing my risk correctly and dealing with what happens. All right, now speaking with that being said, let's go ahead and see what we got here, guys, in terms of lower time frame opportunities, right? And seeing what we got. So overall, what have we ultimately seen? I mean, we did see a pretty strong move here, guys, for the pound itself. Very, very strong move. Then we just started seeing this more of a complex pullback situation. But even during this complex pullback, like look at price action, right? We had a pretty aggressive drop right here, and look how choppy price has been ever since, right? Very, very choppy. In my opinion, right, this type of price action usually leads to more downside, right? Especially if you understand, like, again, I don't really trade too many patterns as much as I used to, but the patterns really shows you how to identify momentum in a market. So overall, this type of momentum looks very choppy, and I think that there is an opportunity for price to really go ahead and go lower from these areas, especially after seeing something like this that we just seen, right? I'm really going to circle something specific right here. Let me actually zoom in on this. Right, like looking at something like this right here, right? Very simple price action, guys. Look at this, right? We had a pretty strong move up right here, right? Price came back down, retested back into this level of structure, But then ever since we came back down, we started creating lower highs, right? Those lower highs led into actually creating a lower low with breaking this level. So now this really does look like more opportunity for us to continue shorting pound dollar, guys, going into tonight. So I really like the opportunity here to go lower, all right, to really sell this specific currency pair as a whole. And it does line up with, again, my bias on the dollar as well, right? So I like this, right? I like the opportunity to potentially go short. So what I would like to see is if we can get a pull back up into this level of structure right up here, right? If we're able to get a pull back up to the 1.255 level, then that's really where I would be comfortable going ahead and taking a short opportunity, right? And that's if we get the pullback, right? Price doesn't have to pull back, but if we do, maybe somewhere in here, then yeah, that would be pretty lit, right? Because then we can go ahead and target way back down to the downside. Okay, something like this for sure, right? Again, we could use the overall swing high just to be safe, like this swing high right here. So stops will be above here for around a 30 pip stop. Initial target is going to be down to this swing low right here will be first target. Ultimate target will probably, well, not ultimate, but the next target will probably be to go ahead and close all of this wick, you know, fill this entire big wick that we have there, and then potentially even go, you know, much lower, right, all the way down to even, you know, possibly this low right here that we have created as well, right? So this is, again, we could be wrong, right? And if we're wrong, that's why we manage our risk correctly. But overall, that's really what I really like, what I will be looking for, and what I will be leaning for, you know, going into tonight, guys, with pound dollar. And if the market actually reverses and says, nope, Abel, we're going to stop you out just because we don't like you today. If we see something like this, where we actually see price reverse, break structure, right, then at that point, we might actually be able to say, you know what, price action has shifted. Let's go ahead and change our trend and actually go ahead and reverse this thing and go back higher. Right, so that's just how I'm going to be looking at, you know, pound dollar, guys, going into tonight for sure, and seeing what happens. A break and close below this 1.218, 1.217 level. Like if we're able to really go ahead and get below this level right here, right, this juicy level, then I really do expect a lot more downside for sure, though. Let's see, why are you expecting a bullish pound versus a bullish dollar? That's a good question, Oscar. We actually spoke about this earlier, right? It's because, you know, tonight at 2 a.m. Eastern, right, 2 a.m. Eastern, you know, we do have CPI data coming out for the pound, and there is a potential for this, you know, these numbers to come out lower, right? There is a potential for it. Okay, if inflationary numbers come out higher, right? If inflationary numbers come out, I actually think I might have said that wrong earlier, right? But if inflationary numbers come out higher, then that could bring some strength for the pound as a whole, right? Short-term strength, but it could bring some strength, right? If inflationary numbers come out higher. If inflationary numbers come out lower, right, then that could possibly really send the pound absolutely tanking. Okay, even it's gonna make it even weaker against the dollar. Okay, so I think I might have said it just wrong like 2 minutes ago when we were talking about it, but I want to clarify this. Okay, if this comes out higher, then that could bring short-term strength for the pound. Okay, which could cause it to be stronger than the dollar as well for a short-term period of time. If it comes out lower, then the pound is probably going to hell. Okay, the pound is probably going to hell. Like literally, probably just going to absolutely just tank. Again, this is just my opinion. All right, that's just my opinion on how I look at it. Right, but high inflationary numbers typically benefits the currency, not the economy as a whole. Right, because when we're talking about the economy, guys, like especially here for the pound, like the FTSE 100. This is like the equivalent to the, you could say the S&P or the US 30 over here in the US, right? So like the FTSE 100 is the equivalent of an index to, you could say, NAS 100 or so, right? Or not even NAS 100, but the S&P 500, right? So if inflationary numbers come out higher, okay, that's going to cause a lot more fear in this market, and that's going to cause this to potentially continue to tank. And if this is tanking, the reason for it is because people are liquidating their assets and converting it back into the pound, which is going to cause the pound to increase in value itself. Okay, I hope this is making sense, right? So that's pretty much why there is the potential for pound strength to come in. Okay, so that's pretty much where we're at. Let's actually go ahead and see where we're at, guys. Now I want to take a look at this actual setup that I said that I'm actually in right now, currently speaking. All right, let me actually show you guys where I was actually at. All right, so I actually took this trade, guys, earlier today. And I think that we still have more upside for this, right? So I'm literally riding out a very, very strong position here. Right, again, this opportunity, guys, that I took, like, it was super low risk. I mean, the risk is always the same. I was risking 2% overall, but look at the risk reward here, right? My pips, in terms of pips, I was only risking around 5 pips here, right? Literally only 5 pips. Okay, I took this at around maybe 2-3 o'clock right in the afternoon, which is why I was comfortable taking it, simply because of where we were in terms of structure, right? And look at this thing played out absolutely beautiful, right? And again, like, I can literally show you guys the actual, it's gonna be hard for you guys to see, obviously, but like, it's gonna be hard for you guys to see like the actual entry, but my entry is sick, right? Like, that's a sick entry, right? Like, my stop's already at break even, right? This thing is just flowing, right? But I was able to get an entry down here, and it was because I was really just playing off where we were in terms of structure, right? Let me actually just break this down, right? We're playing off where we were in terms of structure at a very strong demand zone. You know, for the most part, we were seeing USD CAD in the middle of this deeper correction, this complex correction. But then we ended up coming down to this demand zone right down here, right? And we've seen a pretty nice reaction off of this demand zone. After this demand zone, we've seen another little complex pullback. And then we ended up getting into this period right here where price was starting to fail, right? We ended up creating like this little triangle pattern, right? Descending triangle pattern. And based off where we were, I'm like, man, I could take this trade, have a very short pip type of stop loss, and see what happens, right? So I took the trade itself, literally right here, caught the entry, and right now we're floating almost, what, 60 pips or so, right? Floating around 60 pips on this bad boy. And I think, again, we still have a lot more upside to go. But guys, this is a 13-to-1 risk to reward. Like 13-to-1, right? Like, think about this, right? I was risking 2% on this position. Once it actually officially gets to my take profit, that's a 26% gain, right? That, like, I don't think you understand how crazy that is, right? That will pass any prop firm challenge out there, right? So we were risking 2%, right? But because our risk to reward was 13-to-1, right, our gain was 26%, right? Because all we're doing is multiplying 13 by 2 to figure out what our gain was, okay? Because we're risking 2%. So I just made, technically speaking, 26% on this opportunity, right? Because I was only risking 4%. So because I was only, I mean, not 4%, because I only had a 4-pip stop loss, my lot size, I was able to absolutely increase it to a much larger lot size. Like, I got a few standard lots on this thing right here. Just to put in perspective, right? I got a few standard lots open on this position to make 26% on your account. That's why risk to reward is so important, okay? Because I could have taken 5 losses, right? Back to back. But then I hit for one of these bad boys where I'm risking 2% going for 26%. So, and this is all hypothetical, right? I didn't just lose five trades. I'm just all hypothetical, right? Let's say I took 5 trades and I lost 2% on each of those, right? That's 10%. I lost 10% on those 5 trades in a row, right? But then I get something like this that just smacked for 26%. Guys, that's why risk to reward is important. Because, yeah, I just took those 5 losses, but this one win completely erased all those losses, and now I'm still up 16% even after you equate for those losses. That's why risk to reward is so important in this game. That is crazy, right? That is crazy. Absolutely amazing. That's why I focused on risk to reward more than I focus on actual win rate. Because right now, we are in the bag and in the money. And trust me, like, I literally just made more than what my monthly wage used to be at my job that I was at. Right? At the warehousing job that I was at, right? I was literally making maybe $4,000 to $5,000 a month at that job, which was 4 years ago, right? Last time I worked there. I made way more than that, literally, on this one trade that only lasted maybe what, 6 hours, right? I got in at around 3 o'clock, 3:30, right? So it took around 8 hours, all right? So in one full day of work, 8-hour day, right? 8 hours of just holding, I made way more, guys. And that's the things that I talk about, right? Just understanding these things and understanding where we're at. But now, I'm actually going to close this right now as well. Right, I just closed it out. All right, I'm very satisfied with 26%. Right, realistically, it was more so around 23%, but it's cool. Right, but I do believe, and this is the cool thing about it, right? I could have continued to hold, but it's cool. Right, but I still think we have more upside. Right, right? I believe right now USD CAD has an opportunity to continue, right, going higher. Now, what I'm actually going to be watching, and the reason why I wasn't really too stressed about closing it out just now, and why I really don't care, is because I also knew where we were at, right? The reason why my target was right up in these levels is because look at where we're at in terms of structure, right? We are back up at a very interesting level of structure right here, right, where price has clearly continued to react and reject from this level. So there is an opportunity for price to go ahead and give us a pullback right here, right? And I don't want to be in that trade no longer in case price says, no, you know what, Abel, we're actually just going to go ahead and go lower. Again, the market going to do what it wants to do, right? So that's a possibility. So instead of me just trying to hold this trade during this pullback with the potential of price going lower, I'll rather collect that 20% gain. If price does pull back, which I do expect it to do, right, probably to pull back, I'll look for another re-entry to then eventually go ahead and jump back in to see if we are going to go ahead and break the highs. Because I'll rather go ahead and secure that 20%, 22%, 23% I just secured, right? And then look for a re-entry, only risking 2%, than just allowing the market to pull all the way back and not securing nothing, okay? That's one thing that a lot of us struggle with doing, is knowing when to secure the bag. That is a big struggle. But the thing is, you have to learn how to really close your trades when you are at a certain level, especially when you have targets already predetermined. Don't become greedy. Once your targets get smashed, get out of the markets. Get your butt out. And then wait for a pullback and then jump back in if you want to. I hope you guys get what I'm saying, guys. I just secured 20%. So I'm comfortable waiting for the pullback if it happens and then risking 2% to try to jump in for another re-entry. Instead of me trying to be greedy and trying to stack trades on top of one another. And then what happens if the market just pulls all the way back down and it goes right back to my entry? See, now I'm going to be very pissed, right? Because I'm going to be stopped out of break even. I'm going to get stopped out of break even. And I ain't even secure nothing. No, right? We have to really be disciplined. Now, what happens if price actually just goes ahead and breaks up? Right? What happens if price actually says, no, let's actually go ahead and break up above this? Then that's fine, right? That's just more confirmation that we could see more upside, right? And if that's the case, again, I'll wait for a pullback that makes sense, and I'll go ahead and risk my 2% again. I'm comfortable risking 2% if I just make 20%, guys. That's the name of the game. When we're talking about risk management, understanding how to risk correctly, that's a part of it. When we're talking about money management, how to manage your money correctly, that's what we're talking about, right? I'm managing my funds right now. Right, I'm managing my funds. That's key. You guys getting this, family? Drop some sevens in the chat, right? I always like to confirm that you guys are paying attention, and because I know there's some of you guys that probably fell asleep right now, right? And you're gonna have to catch the recording because this is a fire session right now. But drop some sevens in the chat if you guys are getting this, right? Because this right here, like I said, man, like this is $1 million information. Right, there's other people out there right now, guys, that are quote unquote mentors that are charging thousands for access to courses and stuff like that, and they don't even teach this type of value. They don't even teach it at all. Like, they don't teach this type of stuff because they don't know it. Let's see. Do you also watch commodity and bond price for intermarket analysis since commodities and currencies have strong correlation? That's a great question, Loveline. That's a very good question, right? And yeah, I do. You know, I actually do look at certain commodities. Bond prices is something I'm getting a lot more into, understanding the value of bond prices and how it correlates to the markets. But in terms of commodities, yeah, I definitely do, especially some of the commodities that are going to affect a lot of these currencies, 100%. That's a really good question though. Let's see, Abel, is that because of the supply zone? Right, the supply zone, yeah. I mean, this whole zone right here is a very interesting level where the market pretty much reacted pretty strongly. So I'm taking the money off the table at that point. See money, take money. Exactly. All right, that's the name of the game. That's the name of the game. Let's see. I can't wait for the boot camp. I'm telling you, Kyle. And this, yo, like I know, I keep on trying to hype up the boot camp, but it's not hype when you know that the value is going to be next level. All right, like the value is going to be absolutely next level. Like absolutely next level. Right, shout out to Mark Patterson in the building. What's going on, Mark? I appreciate you. Right, welcome to the family. We got D Blunt as well, new subscriber as well. Welcome to the family, D Blunt. I appreciate you. Welcome to Familia. All right, let's see. We here, wide awake over here. Let's go. Let's go. All right, couldn't be me, right? Yep. Please give some likes to Abel to help him on YouTube. I appreciate that, Diana. Right, hopefully that means I'm giving you guys some value tonight. Let's see, take money out before the market falls, like biting on his bike. You are, yo, you are hilarious, Derek. I seen that clip too with Joe Biden actually falling off his bike. That is hilarious. I mean, realistically speaking, though, like, how old is Joe Biden? 70, 80 years old, something like that. All right, so if I'm able to still ride a bike at 70, 80 years old, man, that would be a blessing. But yeah, that is dumb funny. Let's see, bro. I can't wait for the boot camp. Oh yeah, I'll see. I'm telling you, we going crazy, right? It's gonna go crazy. Let's see. Isn't the trend more in the downside instead of up? It depends on how you're looking at it, Raymond. Right? Are you looking at it from more of this micro perspective, or are you zooming out and looking at it from more of a macro perspective? Right? Because if we're being realistic, I mean, USD CAD really hasn't been. I mean, we've been pretty much rain bound this entire freaking year. Right? Really haven't done much. But from more of a current perspective, I mean, look at this momentum that we had. Right? Massive momentum to the upside. All right? Massive momentum. The only thing that could really change this, right? The only thing that could really affect this is obviously this whole situation with oil prices. Right? Because oil prices definitely affects the Canadian dollar overall. Right? And oil prices, I do believe oil is going to continue to go higher. Right? It's just, you know, the demand for oil is through the roof right now. The supply is not as easily readily available. So that in itself is definitely going to affect the CAD, right? So that is the reason why this might, you know, it could go in the opposite directions. But for the most part, I really like the bullishness overall. That's my opinion, right? I really like the bullishness. Let's see. Welcome. Biden flexing hard, right? Yeah. Let's see. Oil to 85. I mean, it'll be tough for oil to get to 85. Let's actually take a look at oil. Oh, oil is tanking right as we speaking too. Let's see where we at. Let's see. Oil's at 105 right now. It was at, what was the peak over here? It was at 130, 129, 130. Right, and then we pretty much just started going sideways. Now we're actually starting to tank. Interesting. All right, overall though, and this is just my opinion. This is my opinion. Okay, but overall, I still think oil is going to continue to fly. That's my opinion. Let's see, 85. What we got at 85? So 85 is back to the structure level right here. I mean, even if we do come back to 85, again, my opinion. All right, my opinion. I could be wrong, 1,000%. All right, but my opinion. All right, let's see. So let's say we're in a recession, which we're in. How do brokers behave? Do they allow withdrawals? I mean, this is the thing about these brokers, guys. Like, you got to understand, right? Like, for the most part, it would not make sense for a lot of these brokers to not honor withdrawals. Right, because again, what's the success rate of Forex traders? 90%, high 90% of people are actually losing. Right, so it would make no sense for a lot of these brokers, even through a recession, which again is really probably not even going to affect them overall. Right, it makes no sense for them not to honor it. Right, because they're still making so much more money from the people that are losing. Like literally, right? It's like you really want to think about, like when we're talking about, like if you go to a casino, right? And you know how the saying goes, the house always wins, right? Which is the casino always wins, because yeah, there are some professional gamblers out there that actually are extremely profitable, but the vast majority of people that go to casinos to actually bet, they lose, right? Like vast majority of them lose. So even though a lot of these casinos pay out the big bucks to people that hit jackpots, they're still making so much more from the people that are losing. It's insane, right? So they're able to go ahead and mitigate all those winning jackpot hitters from the amount of losers that actually happen, right? So the same exact thing for these brokers, right? The house is always going to win, right? Yeah, there's going to be profitable traders that can take out a lot of money from these withdrawals and smack them for a bunch of withdrawals, but the vast majority of traders that are in their broker, they're not getting no withdrawals. All right, so yeah, look at it just like the casino. The house always wins, trust me, right? Especially for the brokers always win in the long run. So it really wouldn't make sense for them to actually go ahead and not honor withdrawals unless they're just trying to completely close down shop for whatever reason. Then it's probably gonna be a problem, right? But overall, these brokers are actually extremely profitable, guys. Like they're making a crap ton of money because most people are losing. That's the facts. That's the reality. Let's see, 8:30 p.m. Abel in Cali, wide-eyed open, my dude. Shout out to you, brother Joe. Appreciate that. Let's see, Abel, as a newbie to this space, do you recommend this boot camp or is it for a little bit more advanced? That's a great question, Lords. And honestly, I recommend everybody, no matter your experience level, right? Whether you're a beginner or whether you're advanced. Because again, one thing about me, they call me Mr. Simplicity for a reason. Even for the newest trader, I'm able to break down even the most advanced things in the most simplest form possible. That's the best thing about that's probably one of my best traits as not just a trader but an educator, is that I can really simplify even the most complex things. So even if you are a newer trader, I highly recommend you to do this, because you're going to learn the real, you're going to learn the raw, you're going to learn exactly what it takes to truly become a profitable trader in this space by actually going on that boot camp. And that's just me being honest, right? So I recommend everybody. And again, this is the last week. I really was going to close access to the boot camp this past weekend, but I had probably 20-30 people messaging me like, Abel, can I pay this week? Abel, can I pay this week? Please open up a spot. Please keep a spot open for me. So I'm going to leave it open all the way up until probably Saturday or Sunday, right before the boot camp. But yeah, I recommend everybody, 100%, no matter what your experience level is. Let's see, USD CAD downtrend. I mean, it is possible, right? We'll see ultimately at the end of the day. Let's see, hit some more likes, family. 100%, guys. Go ahead and smash that like button. Let's go ahead and get the likes to 100. Right, let's smash 100 likes. I appreciate y'all. I love you guys for doing that. Definitely means a lot to me. After this boot camp, we finna bet the house. 100%, 20 pip. After the boot camp, right, we the ones that's gonna be clearing the house. 100%. 100%. Right, 100%. All right, so let's go ahead and see what else we got here, though, guys, on the table. Right, let's take a look at pound yen. I know it's definitely a fan favorite for a lot of people. Really looking at what the pound yen is doing ultimately and overall. Right, so this is going to be a very interesting one, guys, to really take a look at, because for the most part, pound yen is pretty much now trading above pre-Brexit levels right now. For a lot of you guys that are probably newer, you guys probably didn't know or don't know what Brexit is, especially if you're not in the UK, where it's pretty Brexit is all over the news overseas and stuff. So you guys might be familiar with it. But overall, guys, back in 2016, right, there was an event called Brexit when the Great Britain pound decided to separate themselves from the European Union, which caused the Great Britain pound to absolutely tank, right? All the pound pairs dropped literally 1,000 pips in a matter of 24 hours. Again, this is literally when I was pretty much still fresh in the game. I think I only had 6 months under my belt, 7 months under my belt when this actually occurred. Probably 8 or 9 months under my belt. But I remember this literally vividly, right? Because it was the talk of the town. Brokers pretty much really started to lower leverage tremendously, so that people really didn't try to trade this event. There was a lot that happened back then. But even over that whole drop that we seen occur, for the most part, we went through a 3 to 4 year period where the market just went sideways, and we literally came back up and really erased that entire drop that we have, which was Brexit. Now, I personally believe that we're probably going to see still, and again, long-term perspective, I'm still very much bullish, guys, the Great Britain pound against the Japanese yen. Okay, it's my opinion, right? very much still bullish. But the question that we have here is, where and when can we really expect price to go ahead and continue to go higher? Right? Because right now we are at a very, very strong level of supply where there is a potential for price to really correct off of these levels and get us down into around, I would say, this 163 area, right? 163, yeah, around the 163, 164 level, right? I would not be surprised if we do see this occur. Now, again, keep in mind though, depending on how data comes out tomorrow can change everything. But as of right now, I mean, we did have a very bullish day yesterday, right? We did have a very bullish day yesterday, right? Again, this thing even closed with no top wick. But based off what we're looking at here on the 4-hour time frame, we're starting to see the price really reject and react from these highs up here, right? So what I think can actually happen, again, this is just my opinion, right? I'm very comfortable with being wrong if that's the case. But what I think can happen is I think we're going to possibly see price come down. Again, this is without no type of data release effect. This is strictly technical analysis, right? Obviously, with implementing the data that gets released at 2 a.m. tonight, that could change everything, right? But from a technical perspective, I would really like to see price come down to these levels, like really, really down into here, like the 163.8, 164 level. If we're able to see price come down to these levels, then at that point I will definitely be looking for opportunities to go ahead and buy much higher to the upside. But again, I keep on bringing up this data and this news because, again, that's what really is contrading. That's what, guys, that's what really affects long-term direction in the markets. Like, that's what a lot of people don't understand, right? Data and news is what dictates a lot of things, right? So this right here at 2 a.m. CPI, depending on how this comes out, yeah, it could send the pound tanking all the way down to this level. And if we get down here off of data, I'm buying the hell out of it, no questions asked, right? Or the news can also make a complete U-turn of the markets and say, nope, right? Based on this inflationary report, which again, if inflation does continue to come out high, and this is the thing, if inflation comes out high, I'm expecting a U-turn and I'm expecting higher prices for pound yen. If inflation does come out high, which again, technically is the rumor right now, right? So if inflation does come out high, my opinion, we're probably going to see a U-turn and the market, rebound and go ahead and continue going higher. But from a solely technical perspective, right, not thinking about news, not thinking about news affecting it, yeah, I would really, like, normally I would really be interested in this level down here, right? That 163, 164 level, 100%. All right, so that's pretty much where we're at, guys, for pound yen. It's going to be very tricky for anybody that wants to try to trade this tonight because of the data, because of the news itself. So I'm probably not going to be trading it, personally speaking, especially not at the areas that we're at right now. If I were wanting to trade it, it probably would have been trying to short from up here, playing off of this supply zone up here. That probably would have been just to try to catch a little bit of a pullback. But on the release of the news, I'm going to be honest, I don't wake up during London session, right? So I'm going to be sleeping, right? I'm going to be knocked out. I'm going to be in my pillow, right? I'm going to be drooling on my pillow by the time this news really come out. So by the time the morning happens, when I see what happens in the morning, then I'll be able to see whatever happens. Like if price for whatever reason by the time I wake up is trading down at these levels, that would be amazing because then I'm buying the hell out of it, right? I'm going to be buying it up. Or if price is actually much higher by the time I wake up in the morning, then it is what it is. There's nothing that I can do. I'll have to just let that market play out and come back to it another day. All right, so that's pretty much where I'm at, guys, as well for a pound yen. It's very interesting. Again, do not sleep on this type of data, right? This is very, very important. It's going to affect the pound overall. A lot of investors, a lot of smart money traders, or not smart money traders, but a lot of smart money as a whole is going to make a decision based on how this data comes out. And that's just a fact, right? Even though, yeah, at times you must play the rumors. That's very true, right? But when it comes to trying to measure inflation, it's very hard to do because of how bad a lot of these central banks dropped the ball, right? These central banks like really, really screwed up with how they were handling inflation. So now, for the most part, and this is my opinion, right, but a lot of the big time smart money players, like they're really more so waiting for actual facts at this point to see what they should do next because of how bad a lot of these central banks dropped the ball. right? But that's going to be overall pretty interesting to really see what it does come out as well, guys. And then yeah, take advantage of it when it does come out. All right, so let's go ahead and see what gold is doing. I know gold is also a fan favorite. I love trading gold simply because of how volatile it is, right? Very, very volatile asset. Now, again, just for some reason, guys, and again, I'm really not sure as to why, right? But for some reason, gold has just not really been acting safe havenish like it normally is, and it's probably just because of its for at least this specific gold pair, right, correlation to the dollar. The dollar has just been way too strong across the board, where it's even causing gold to continue to drop in value, right? Because if you look at other assets, like say, you know, gold against the euro, right, when you do things like this, you know, this more so looks like there's opportunity for more upside, right? Because gold is definitely far more stronger against the euro, where this, again, I expect more upside for dollar against the euro. But when it comes to dollar against or gold against the dollar, it looks like it actually wants to drop a little bit, right? So I think for me personally, based on what we're looking at and based on structure, I think we have a lot more not a lot, but I think we have more downside, guys, for gold, personally speaking. All right, I would not be surprised if we see actually gold really go ahead and rebound, come to around the 1800 levels, and then even off of that 1800, we could even see price come down to around 1790s, 1780s levels, come down all the way down to this demand zone as well. But yeah, that's just what the way price action is looking right now. That's what it looks like gold wants to do, right? I think we're just going to see price come to the 1800s and then down to around the 1780 levels for gold. So you guys do what you guys want to do with that information, but overall, that's just my personal bias. I think we see more downside. Let's see. Do you look at COT data? Real interesting tool, shows you where traders are positioned. 100%. I know what the COT data is 100%, and that's something that I have not really, like, I know exactly what it is and how to really understand it, right? Especially on because the COT data really helps you identify where retail is positioned, where, you know, institutions are positioned, where commercial institution players are positioned, which is actually really the interesting tool for sure. But if I'm being honest, I have not done too much looking into it lately at all. But I should, right? I definitely should start looking at the COT report a lot more, because it would really only strengthen my bias from a sentimental standpoint, right? Because the COT data report, that really shows you sentiment across the board from what the big institutions are really thinking and are approaching the markets, right? So yeah, I definitely should actually go ahead and continue or look more into that, Jay. I 100% should, and I'm probably going to do that now after this call. Right, because again, I'm very big on sentiment, right? Like I really feel like sentimental analysis is probably one of the best forms of analysis anybody should be using. And the COT report literally tells you sentiment. That's exactly what it does. It tells you sentiment across the board. All right, let's see. Still in IM? No, I'm not with IM no more. I'm not in IM. All right, I love the people. I love the platform. Right, they gave me an opportunity to really educate and become a mentor to thousands. And I would never ignore that, you know, but I'm definitely not with them no more. Let's see. Central Bank of Japan is still super dovish. I still think the pound will rise. Yeah, yeah, that's my opinion too. All right, the Bank of Japan is literally trying to destroy the yen, basically seceding, to be honest. Yeah, I mean, that's definitely a very, very good point, Loveline, and that's why we've been bullish pound yen forever. In fact, we've been bullish pretty much every single currency against the yen, right? Because, you know, the Bank of Japan, they're still very much in the quantitative easing phase, which I actually did see a report today, though, that they actually did start to reduce their balance sheets as well, like every other central bank is doing. But for the most part, they're still very, very, very much lenient with their actual, how do I put this, right? They're still putting a lot of money in their economy, right? They're still printing a lot of money in their economy, right? And they haven't done anything to try to fight inflation whatsoever. And yeah, that's absolutely destroying the yen. So that is a very valid point, which is why we've been bullish pretty much everything against the yen across the board for a little while now. Let's see. Yeah, COT is pretty OP for swing trades. 100%, right? It really is, right? So again, that's, in my opinion, one of the best sentiment tools around. So I really got to get more into that 100%. Right, but yeah, overall, guys, gold, I'm still very much bearish gold. So if we could see a pullback back up to maybe 1835 in this range, that can be an opportunity to go ahead and really short back down. Again, target down to around the 1815, 1800 levels will definitely be Not a bad play if you're going to be trading gold going into tonight, right? But overall, family, those are pretty much the opportunities I'm going to be looking at going into tonight. Overall, my sentiment has not really changed. I'm still very much bullish the dollar as a whole. So I'm still very much risk off sentiment as a whole, where I believe is a lot of players are going to be more risk off, which is going to benefit the US dollar. That's going to devalue the stock market, devalue the industry market. So those should probably continue dropping overall. And yeah, I'm sticking with that until the sentiment changes, right? Again, I stay with the sentiment until I stay with the trend until the sentiment changes. Okay, and once the sentiment changes, then we go ahead and change our overall outlook as a whole. But family, it's been a phenomenal stream tonight. Again, this is probably one of my best streams that we've had. We've had a lot of good ones, right? But this is definitely a banger. I appreciate all the newest subscribers that actually joined the call today, all the newest subscribers that recently joined the family. Hopefully you subscribed because you were able to get some value. I see we got Bonamar in the building as well. I did not shout you out. I want to give you that shout out as a newer subscriber. I appreciate you. Right, I appreciate every single one of you guys for tuning in, family. Again, please rewatch this if you guys came in late, because these streams right here are super valuable, super informative, and I promise you it's going to take your trading up a whole nother level. So family, I appreciate y'all. I love you guys. Just let me know in the chat one more time if you guys got some value, guys, by dropping your favorite number, your favorite emoji. Right, go ahead and just spam the chats one last time before we get off this. Right, it just, you know, it makes me feel good, right, just seeing that a lot of people are actually getting a lot of value, right? So go ahead and drop your favorite number, drop your favorite emoji, drop your favorite sticker. And for all of you that are a part of the inner circle, you guys know the vibes. We'll be in the chat talking it up. If you guys have questions, comments, or concerns, definitely let me know what you guys think about tonight's stream, and we'll definitely have more in-depth conversations in the inner circle. If you guys recently joined the actual membership here on YouTube, then go ahead and please message me on Instagram so that I can get you added into the actual chat, and we can get you into our inner circle as well. And for all of you guys that are a part of the boot camp, I love you guys. I appreciate y'all. If y'all interested in actually getting signed up for the boot camp and getting more in-depth information on this, all the information is in the description down below on how to do that. You got to fill the form first and then send me an email, and then we'll go ahead and get you signed up for that. Family, I appreciate y'all. I love you guys. We'll be back tomorrow, same time, same place, because we do this every Tuesday, Wednesday, Thursday at the same exact time. And I look forward to being here with you guys again tomorrow night. All right, family, love you guys. Appreciate y'all. And I'll see you guys a little bit later. Let's get it.